of January. Mr. Michael Brown is bright and early. Let's get him in. Invite to co-host. There we go. Just while he's joining, I'll do the legals. Nothing discussed on this space session constitutes trading and investment advice or infers any kind of endorsement by PIQ Global Limited, Trains PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, is Mr. Michael Brown, way, and myself, Mr. Ryan Paisley, way. Good morning, my friend.
Good morning, Ryan. Good morning, everyone.
Morning, Cam. Morning, Lewis. Morning, Tom. Morning, Paul. Morning, Dom. Yeah, morning, everyone.
Like being back at school, calling a register.
I know it. Here.
To be honest, you could probably still pass for 15. So
steady. Steady. Right, what's been going on, my dear friend?
Oh, well, it was quite a day to start the week yesterday, wasn't it? Nothing like a nice, calm, quiet, subdued Monday to kick off the new trading week. Of course, that is not what happened yesterday. It was a pretty brutal equity sell-off, although it is worth noting, actually, that the market ended the day considerably off the intraday lows. The S&P ended the day down by about 1.5%. The Nasdaq 100 shedding about 3%. Although they were probably about half of the intraday losses were paired. At the lows, the S&P future was down well over 3%, and the front Nasdaq future was down well over 5% at one point. Just to throw a few more stats around that move, that's the worst daily decline for the S&P since the 10th of Jan, and the biggest one-day drop for the Nasdaq 100 since the 18th of December. Also, just for those who like kind of market milestones, Nvidia ended yesterday down by about 17%. That saw just shy of $600 billion wiped off the firm's market cap, which is the biggest one-day market cap decline in financial market history, which is something worth bearing in mind.
Can I just add a little fact or fact onto that?
Go on.
They actually have Nvidia have the record for the 8 out of the 10 biggest drops in market cap ever.
Yes, they do. And actually, I was thinking about this yesterday because I'm a bit sad. And the level
by a bit.
You fucker. The level of volatility in the stock price of such a huge company is quite remarkable, because if you think about, as you've rightly said there, but you think about, who market leaders have been in the past, whether it be Apple, Microsoft, even before the tech names kind of, really dominated things, the level of volatility that we see in the valuation of Nvidia is quite staggering in both directions, it should be said. Nevertheless, of course, the catalyst behind this move yesterday was this DeepSeek AI shenanigans. Of course, we covered this yesterday, but just for those of you who've been living under a rock, essentially some Chinese chap has apparently created an AI model which is as good as, if not better than, the ones created by the likes of OpenAI. The important thing is that model has been created for a much lower cost, with much less training time involved, and also with older technology having been used as well. So that has, in the market's mind at least, perhaps threatens some of the capital expenditure that we are seeing or going to see in the AI and chip sector. Naturally, the risk aversion in the equity space did have a bit of a spillover effect elsewhere. We saw treasuries rallying strongly across the curve, with 10-year yields falling by 8 basis points on the day, briefly touching new year-to-date lows below 4.5%. And incidentally, money markets, they now fully price 2 25 basis point cuts from the Fed this year in June and December. That is, of course, in line with the projection outlined in the dot plot, and all it took was a 3% fall in the Nasdaq for the market to believe what the Fed have been saying. Haven demand also evident in the FX space, with the yen and the Swissy rallying to the top of the G10 leaderboard. The dollar a touch softer, although the dollar index has paired those losses and rebounded overnight, which I'll get onto in a moment. But we did briefly trade below the 107 figure on an intraday basis yesterday. And interestingly, gold not really shining despite the Haven demand we saw in the market yesterday. The yellow metal ending the day just over 1% lower, perhaps suggesting a bit of a broader momentum unwind as a result of that risk aversion due to the AI headlines. In terms of other catalysts from yesterday then, firstly, just sticking with that AI business. DeepSeek said late yesterday that they had reportedly been subject to, and I quote here, a large-scale malicious attack which had degraded their services as a result. In order to, kind of get a grip of the situation, they have decided to temporarily limit registrations to their services to those with only a Chinese mobile number. If that doesn't ring a few alarm bells, I don't know what
Well,
will.
can I just add something on this as well? Sorry to interrupt, but obviously it is the subject du jour. It was reported yesterday. Remember, me and you actually said in yesterday's show that
Oh,
guys,
I know where
people
you're
are worried
going with
about.
this. Yeah.
Yeah. So apparently, it's already been reported that DeepSeek is collecting IP, keystroke patterns, device info, and stores it all in China. God knows with what else. So yeah, you keep worrying about your dance videos whilst divulging all your information to DeepSeek. I'll stay well away from that one if it's all the same.
Yeah, and the other thing that sprung to mind, I was having a few conversations about this in the office this morning, was, it's all well and good people throwing into, DeepSeek, how do I don't know, write a resignation letter or whatever it may be.
Oh, hang on.
But
And you heard it here first. Exclusive, exclusive.
no. But what about all those people uploading, confidential company information, going, "Oh, great, this new AI thing, it's going to make my job so much easier." Yeah, great, you've just
Yeah,
uploaded all your trade
exactly that.
secrets to the Chinese Communist
Exactly.
Party. So
Also, I do love
gold star for
I
that
do
one.
love how everyone on Twitter now is an expert in AI models. Meanwhile, I'm still here saying please and thank you when I type into ChatGPT.
I do that as well.
Well, yeah,
Well,
you've got to keep them sweet.
exactly. If these robots are going to take over the world one day, I want to be in their good books. Let's put it that way.
Yeah,
Anyway,
exactly. I don't want to be dead. I want to be a pet.
oh God. Anyway, moving on to the political situation in the United States. A few headlines there. President Trump, he is going to be delivering an address to a joint session of Congress on March the 4th. A bit of a date for the diaries there. Trump was also talking overnight. He is going to be signing a few executive orders to create, actually, I think he has signed these now, to create an Iron Dome missile defense system for the United States. He was also talking tariffs overnight, saying that he would prefer a universal tariff that is, quote, much bigger than 2.5%. If you're wondering where 2.5% came from, that is what the FT were reporting Scott Bessent, who is, of course, Treasury Secretary, the level at which he would prefer tariffs to start. Speaking of tariffs, Trump also said he will, and I quote again, soon put tariffs on people who mean the United States harm, put tariffs on semiconductors, tariffs on foreign computer chips, tariffs on pharmaceuticals, tariffs on steel, tariffs on aluminium, and tariffs on copper. It's getting to the point where it's going to be easier to list what tariffs won't go on rather than what they will go on. But nonetheless, of course, this is all rumor. We still have no particular certainty in the realm of Trump's trade policies, but nonetheless, we have seen the dollar rebound a little bit overnight. A few other headlines worth mentioning. Actually, quite a few from the banking space. UBS, they are cutting a few hundred jobs in Switzerland. This is as they continue to integrate Credit Suisse. Remarkably, Credit Suisse and UBS merged almost 2 years ago. That was March 2023. Couldn't believe that when I read that yesterday. UBS had previously said that merger or acquisition, depending on how you want to frame it, would lead to about 3,000 redundancies in Switzerland, so not entirely surprising in terms of that news. BNP Paribas, they're going to lift investment bank bonuses by about 5%. Bonuses seem to be getting lifted across the industry. And we've just had, and I haven't read the full story, but a headline just crossing from Bloomberg is that HSBC, they are looking to wind down some of their investment banking operations in both Europe and the United States. Of course, they are on a big cost-cutting drive at the moment. A couple of other things from yesterday. We did have miraculously some better than expected data out of Germany. The IFO Business Climate Index rising to 85.1 in January, above the prior 84.7 and the consensus 84.8. And we had a bit of a mixed slate of US supply yesterday. The 2-year auction tailing the when issued by just 0.1 basis point, which is not particularly worth worrying about. The 5-year auction much more solid, stopping through the when issued by 0.6 basis points. And we, of course, have 7-year supply a little bit later on today. And that, for now, is all from me.
Thank you very much, Mr. Michael Brown. I will start with some German news just purely because I want to put a dampener on the better than expected data that Michael just mentioned. Scope markets, so they Scope, the Scope rating agency, which is basically Europe's equivalent to Moody's and S&P. They came out just now. I saw it on the PIQ terminal. Germany must address the structural weakness to keep its AAA rating. Germany needs to overcome its structural weakness if it wants to keep its AAA credit rating in the long term, according to Eco Svivert, the executive director at the European Ratings Agency. Yeah, don't ask me to say that one again. ES. I love ES. Right. So anyway, so that's that one. Actually, whilst we're at it, sticking with Germany, Germany is still buying significant amounts of Russian liquefied natural gas via other EU countries, despite Berlin turning away direct shipments of Russian fuel, a report was found according to the FT. So moving over to the US, obviously, as is going to be the case for the foreseeable, and as Michael alluded to as well with a load of Trump headlines, there's a lot of Trump headlines. So I'll read a few of those out. Obviously, just a reminder, this all comes from our excellent overnight news roundup, which is provided by our dear friend Zach. That goes out on our Substack. It's also up in the Jumbotron in this Spaces thing. But anyway, I'll crack on. Trump said he will cut corporate taxes further, saying he's eager to work with Congress on tax cuts and insists that tax cuts from administration must be made permanent. He said that Chinese startup DeepSeek's technology should act as a spur for American companies, and said it was good that companies in China have come up with a cheaper, faster method of AI. He also confirmed that Microsoft is in talks to acquire US arm of ByteDance, i.e. TikTok. He said Monday night without elaborating. Sorry, 1 second.
Dear, what on earth has happened there?
Sorry. Yeah, I don't know what happened there. Put the reverb on. Anyway, where was I? Investor exuberance over AI has fueled a bubble in US stocks that resembles the build-up to the dot-com bust at the turn of the millennium. That's gone to Ray Dalio of.
Can I just say, I was thinking about this morning because sitting here as a strategist.
Oh, really?
Well, apparently so. Officially, anyway. It's at least that's what's on my business card. It's an interesting one because Ray Dalio is one of the few people who can actually make that call and not just have everyone ridicule him if he's wrong, because he's got that kind of reputation that goes before him and all the rest of it. You know, if I was to sit there or anyone else at one of the sell side institutions was to sit there and go, yeah, US equities are in a bubble and the market rallies for the next 3 years in a row, you're going to look like a complete clown.
Yep, fair enough. Are you sure your business card doesn't say Chief Mona?
It depends which one I give out.
Hey, moving on. Former BOJ board member, not going to say that one, said the bank will likely raise interest rates again around June or July, even as early as April, if it prefers to act before the upper house election, and seek to hike its policy rate to at least 1.5% in the next 2 years. Sticking with the BOJ, BOJ is seen as likely to wait until the summer for its next interest rate rise, according to economists surveyed at Bloomberg. Some 56% of the 45 BOJ watchers expect the next hike to come in July. So mixed signals there. Might have to wait till April. Could be as early. So might have to wait till July. Might be as early as April. There you go. Spin the wheel.
Basically, they haven't got a clue.
No, exactly that. Over in the UK. UK food prices climbed at the fastest pace in 9 months at the start of 2025, according to the BRC survey, adding to a growing list of inflation threats for the BOE to grapple with its crucial meeting next week. Also something for the Rachel Reeves to try and get her head around if she can.
Of course, we've got that big speech on growth tomorrow, haven't we?
Oh yeah, I can't wait. Can't wait, mate. Can't wait. I'm so bullish. Rental prices outside of London fell quarter on quarter in late 2024 for the first time since before the pandemic, signaling a key milestone in Great Britain's housing market after years of soaring rents. Again, that's in the FT. The UK plans to allow companies to invest pension fund surpluses in order to unlock billions of pounds to help drive economic growth. Go on. I saw your tweet yesterday. Basically, what she's saying is, this is Rachel Reeves' idea, by the way, obviously. What she's saying is, I tell you what, let's let people raid their pension pots and spunk, because we need anything going into the system we can.
It's just
and then we just hope they die before they need their pensions.
Oh, honestly, it just boggles the mind. I mean, there's two things here. One, the issue of letting funds or
So
allowing
I
them
think
to
she actually
use their
said,
surpluses is just stupid, because at some point that will become a deficit again, and then we have massively underfunded pensions. In fact, the only reason we have pension surpluses in the UK at the moment is because of how far rates have moved over the last few years. So all it's going to take is for rates to spend a few years at 2 or 3%, and they're going to be gone again.
yeah. Also,
This other issue, sorry, just to let me finish on that one,
no,
in
go on, yeah,
terms of
go.
letting people raid their state pensions early. I mean, do they
Yeah,
think
that's
that
what I was
there's a
going to come
little
on to.
shoebox with Michael Brown and Ryan Paisy that has my £500 every year that goes into it, and then when I retire, that shoebox is drawn out, and I go to the post office and get my cash? We can't afford the state. Our national insurance contributions that I'm paying and that you're paying, and everyone listening to the call is paying now, are funding the state.
Don't. The
Well,
taxman thinks I died.
they are funding the state pensions for those who are currently receiving that as a benefit. There's nothing there to take early, and that's
No,
completely setting
but this,
aside the fact that taking your pension now means that you're not going to get a proper benefit when you eventually retire. It's just utterly
but also
ridiculous.
didn't Rachel Reeves? I'm sure I saw the quote, or I saw the headline or something, one of the two. That basically said allowing millennials to dip into their state pension early, or something. It was something like that. It was like, don't trust them. They'll spunk it all on meme coins and shit coins. So what happened to your pension? Oh, I stuck it all in fart coin in 2025 and lost it all. All right,
Oh,
thanks,
it's
Grandad.
just ridiculous.
Also, sidebar on this, and Rich Bernard's listening, so I better big this up. I've only had a pension going for about 2 months, thanks to Rich Bernard. I had no idea what one of those was until recently.
I mean, to be fair,
Yeah,
until recently, the odds on you getting a pension age were quite long. So,
I would say saying until recently is quite a bullish remark because I think it's still quite short. Anyway, moving on. Enough about my life expectancy or lack thereof. UK listed companies cut regular dividend payments last year while increasing purchases of their own shares. The latest sign that a market long targeted by income-hungry investors is shifting towards returning cash to shareholders. A couple of geopolitical news. Protesters have demanded halting oil loading operations in Libya's El Sidra port, according to engineers. That's obviously one of the main gateways for Libya to export its oil. Israeli PM Netanyahu is planning to visit Washington next week to meet with President Donald Trump as leaders look to maintain the ceasefire in Gaza. And finally, 4 equity headlines for you. Obviously, 2 of them are AI related. One of them, OpenAI CEO Sam Altman called Chinese startup DeepSeek's R1 AI model impressive on Monday, but emphasized that OpenAI believes greater computing power was the key to their own success, i.e., and I think everyone's in agreement with this, they've not designed and built this on a Commodore 64. They actually have access to a shit ton of NVIDIA chips, which is one of the reasons why, obviously not trading advice, but I do fancy buying the dip in NVIDIA, and maybe I have, wink wink nudge nudge. Perplexity AI CEO posted, we're going to buy more capacity to keep serving the DeepSeek R1 model in America data centers. Those shorting NVIDIA are short-sighted. The proliferation of search agents and assistants that can reason has just begun. That's according to a post on X that he made. One from last. Cathay Pacific has launched a bidding process for dozens of new wide-body aircraft, pitting Airbus and Boeing in what would be a multi-billion-dollar deal. And finally, BAE Systems won a UK government contract worth £285 million to upgrade its threat detection systems on Royal Navy warships, less than a week after the UK said it tracked a Russian ship in British waters. That's according to the Wall Street Journal. And that's it from me. Oh, finally, before I do, big shout out to our regular crew, i.e. CME, which I posted some of their recent stuff up in the Jumbotron. Cam, who's listening in, who will be doing the Crypto Blast very shortly. Also, big shout out to Zishi, our friends that do, Suzanne's down there, who do really, really, I mean, like top class C-suite education stuff in the financial services. So check them out if that's something that floats your boat. But anyway, back to you in the studio.
Cool. Thank you, Ryan. In terms of the day ahead, then, a few releases due from the United States this afternoon, although it does look like a relatively quiet European session, at least in terms of scheduled events. 1:30 this afternoon, we have the latest durable goods orders out of the US. Orders expected to have risen by 0.5% on a monthly basis in December, rebounding from the 1.2% decline that we saw in November. Moving through the rest of the afternoon at 3, we have the latest consumer confidence figures from the Conference Board. Their index expected at 105.6, upticking from the prior 104.7. We also get the latest manufacturing figures from the Richmond Fed, and of course that will help to shape expectations ahead of the ISM manufacturing print that is due next week. Other things to keep an eye on today on the policy front, we are due to hear from the ECB's Villeroy and Cipollone, as well as the RBNZ's chief economist Conway. In addition to that, of course, the FOMC's two-day policy meeting will get underway today ahead of the policy announcement at 2 o'clock Eastern Time, 7 o'clock in the evening London time tomorrow afternoon. In terms of supply, as I said, we have a 7-year auction due from the United States. That is $44 billion worth at 6 o'clock tonight. And on the earnings front, we are due to hear before the market open from General Motors, from Lockheed Martin, and from Boeing. Although, of course, Boeing did give us a bit of a pre-release of their earnings last week. And after the market close, we are due to hear from Starbucks, and we were also due to hear from SAP as well, who are, of course, the biggest stock by weight in the DAX. But I believe their earnings actually came out before the European Open, so that one may have already happened. Of course, market participants will also keep a very close eye on the DeepSeek AI shenanigans, and also any headlines emanating from the Oval Office, particularly after Trump's tariff talk overnight. And then after that, of course, it is a very, very busy 48 hours ahead for markets. Just to give you a bit of a heads up, of course, tomorrow we have decisions from not only the Fed, but also the Bank of Canada and the Riksbank, the ECB due on Thursday. And of course, we have earnings from the Magnificent Seven coming up as well, with Meta, Microsoft, and Tesla reporting after the close on Wednesday, and then Apple reporting after the close on Thursday. So do bear in mind that although today's calendar may be a little bit more subdued, things are going to get pretty hectic as we move through the rest of the trading week. And that is pretty much a lot from me this morning.
Are you sure? There's nothing else you want to say?
Don't think so, no.
You haven't done a pun today. Is this a cry for help?
Well, no, I was going to do a Boeing pun, but you know their earnings.
I was waiting. That was what.
Well, their earnings were already out,
over.
and you know there's been a bit of turbulence in the stock anyway, so I didn't.
Oh, there we go. Boom, boom. But I can. Oh, do you know what? I was getting really itchy. Then I was jonesing for a Mr. Brown quote, pun. Sorry. Thank you for that. I can go back and be happy again. Mr. Brown, thank you for that. Regular listeners, all listeners, in fact, thank you very much for tuning in.
We don't discriminate. Don't worry.
Yeah, no, exactly that. Yeah, if you can put up with us, you're welcome. But yeah, have a great day, everyone. If you are trading, keep it tight. Remember to factor in the fuckery, and we will see you bright and early tomorrow. Take care.
Well,
Goodbye.
Goodbye.